Hey everyone, Daniel here and welcome back to another video. Here today, I want to take you through the worst case scenario for Voyager Digital Stock and exactly what might happen with the company in the event that we experience a bear market throughout 2022 and 2023 when we talk about cryptocurrency related stocks across the board, including Voyager, potentially big digital, banks, a variety of others. One of the biggest risks that they kind of poses to those stocks is a bear market in cryptocurrencies. And, if we do continue to see an exponential rise in Bitcoin, Ethereum, and other cryptocurrencies throughout the remainder of the year, the chart does suggest, looking back at patterns from 2017 to 2013, that we should see a bear market in 2022 that ends in around the end of 2023. Now, what if this happens? What will happen to Voyager? And in this video, I want to answer all of those questions and compare Voyager to Coinbase, which actually experienced a bear market from 2017 to 2019, taking a look at some comparisons and coming up with a potential model for Voyager moving forward. So if you end up finding any value in this video whatsoever, please consider subscribing and let's get into it. So first and foremost, I have found some very, very interesting data pertaining to Coinbase and how they handled kind of the 2017 run, which was absolutely phenomenal for any cryptocurrency investors, and then the bear market that we saw in 2018 and 2019. Obviously, 2020 was a phenomenal year, 2021 even better, but generally speaking, in 2018 to 2019, we saw a deep kind of bear market within cryptocurrencies where Bitcoin fell from $30,000 all the way down to just a couple $1,000s per Bitcoin. That obviously dragged down a lot of other cryptocurrencies alongside that. And because of that, there was a big decrease in usage of a lot of these cryptocurrency brokerages like potentially Coinbase or Kraken or Binance. So what we can look at with Coinbase is look at their users. What happened to their users over those years? What happened to their revenue over those years? And what happened to revenue per user per year during those years? Because that will be very important in potentially determining, again, that worst case scenario for Voyager looking out throughout this bear market that we may or may not see. First and foremost, what's very, very interesting with Coinbase is that users continued to grow throughout the bear market. And this is very interesting and poses a question of, Voyager Digital, even if we do end up seeing a bear market that will most likely, decrease sentiment around cryptocurrencies, Voyager will most likely continue to grow throughout that period because of their size. And when we look at Coinbase, going from 13 million users and over doubling that over 2 years to 30 million users really shows kind of the potential for Voyager to continue growing kind of throughout 2022, 2023, even if we end up seeing that bear market. So that is a tailwind that we have to watch for. Now, what's the headwind of this whole situation? A decrease in trading activity and a decrease in users purchasing cryptocurrencies on a regular basis and trading them alongside that. So when we look at revenue at Coinbase, we'll see that although we did see an increase in users, we saw a decrease in trading activity, which led to a decrease in revenue and thus an even more substantial decrease in revenue per user per year. So not only did revenue decline, causing this number to go down, but also users increased, which kind of pushed it down even further. Now, what happened obviously over 2020 and 2021, Coinbase has had phenomenal quarters and the phenomenal years because of the tailwind that they experience with users and an increase in revenue. So, when we talk about Voyager, although they may see suppressed revenue throughout this period, they'll continue to see user growth. And looking out to potentially 2023, 2024, when this potential bear market ends, it may be a situation where they see an even bigger tailwind of already having a massive user base and getting all that trading volume back onto the platform. And we'll talk about that in a moment. But I think it's one of the things as to, investors need to look forward with a company like Voyager and, really need to kind of not focus on the short term, but focus on the long term with the stock. And again, we'll talk about that in a moment. So what we saw is a decrease in average revenue per user per year from $71 all the way down to $16, which is a 77.42% decline over 2 years. So this is very interesting. We can't really compare the average revenue per user at Coinbase to Voyager because they have different customer bases and different models. Obviously, obviously Coinbase focuses on an actual kind of commission where, it's a flat fee of a couple percent that is visibly shown to each user. That really minimizes trading on the platform. And looking at Voyager, they bake that into the spread, which is what a lot of other companies do, like potentially Binance or other companies. And that really promotes trading, which is one of the reasons as to why they collect much more revenue per user per year. And keep in mind, this has increased for Coinbase substantially. I think they're at $35 per month now when we look at 2021, and Voyager's closer to $100. So again, I just want to look at this proportionately to kind of get a sense of, what is the potential decline for Voyager if we do end up getting a bear market, and this gives us an answer. Right around 77.42% from peak to trough, essentially for Coinbase. So now what we can do is use this number, use this decline, and apply it to Voyager to get a potential scenario, and let's do this right now. Here is my kind of model, and this model is, again, kind of assuming a potential bear market in 2022 and 2023, and first and foremost, here's the current valuation at around $20 per share currently, current market cap around $3.4 billion, fully diluted. What we have is a situation where Voyager currently has around 550,000 total funded accounts. We know May is going to be a phenomenal month with growth of around 160, potentially 170,000 total funded accounts within the month. So if they just keep that up throughout the remainder of the year, Voyager will easily be able to get to 1.5 million total funded accounts. And if they continue growing exponentially, which is what they've been doing, 200,000 or 2 million rather total funded accounts is not too far away. So you already see me using this conservative estimate of 1.5 million total funded accounts as a kind of like a base case. Again, we're looking at a bear case scenario, guys. I have an optimistic kind of model. I haven't shown it yet, as it is, quite phenomenal. But, if you want to see that, let me know in the comment section. Keep in mind, I'm bullish on the company. I'm just taking a look at all realistic scenarios. I'm being realistic, not bearish. So assuming 1.5 million total funded accounts and assuming an 80% decline in monthly revenue per account from $100 all the way down to $20, which decreases the yearly revenue per account from around $1,200 to closer to $240, we get total revenue on a yearly basis at $360 million. Substantially higher than where we are at this moment in time. But, that isn't that bad when we have to consider the fact that Voyager is currently valued at a $3.4 billion market cap. A lot of people out there are saying, Voyager is probably going to go under $10 during a bear market. If that happens, I'm buying. That's just the flat out truth, because a lot of it's just going to be based off of sentiment. This is a company that's going to generate revenue for years to come, even if we do see a bear market. And keep in mind, this does not factor in any of the potential for payment processing revenue from debit cards, margin, credit cards, stock trading, which could also kind of help boost up monthly revenue per account. This is assuming the same decline in kind of a monthly revenue that Coinbase had from 2017, their peak year, back to 2019, kind of their bottom year. Around $20 per account, $360 million in yearly revenue. Now let's take a look at profitability. The company just reported a quarter with $60 million in revenue and operating income margin of 50%. Now, that's essentially EBITDA, right? Earnings before interest, taxes, depreciations, and amortizations. At around a 50% kind of operating margin, we can expect a potential net income margin of anywhere from 35 to 40%, depending on how much they pay in taxes. Now, as the business scales, this margin will improve significantly due to the nature of their business being very fixed with their costs. As revenue increases exponentially, their costs don't necessarily increase that much. So currently, we're operating at a revenue run rate, as of last quarter, of potentially around $240 million. This is higher than that by around 50%, give or take. And, given that, I'm going to assume the same EBITDA margins because, again, they plan on doubling their workforce over the next kind of 6 to 7 months here, and, potentially more expenses coming with the release of new products. I think that will outweigh the potential improvements of roughly, again, that 50% kind of increase in revenue to give us EBITDA margins of 50% at $360 million in revenue. Phenomenal margins even during a bear market, right? And that gives us a net income margin of around 35%. I think that's very realistic. So, Given a 35% kind of net income margin, we can assume total net income at the company at $126 million potentially during this bear market, which is absolutely flippin' phenomenal, guys. We're assuming an 80% decline in revenue per user. We're assuming total funded accounts potentially won't really grow during the bear market, which they most likely will, and this isn't even factoring in the potential for new product launches. Now, what I'm going to use is a PE ratio of 30, which in and of itself is very, very conservative. I think this company on its good days should be valued in a 30 to 40 range, and when we look at this PE ratio, I just want to kind of talk about it a little more once we finish talking about this model here. But using a PE ratio of 30, we're trading at $22 per share, at around a $3.7 billion market cap, 10% higher than where we are, even during a bear market. Now, the thing is, as the bear market continues, total funded accounts are most likely going to continue growing, meaning that once we get out of that bear market, revenue is most likely going to increase significantly. So, what's happening currently? Investors are looking to 2022 to 2023 and saying, you know what? Voyager, the cryptocurrency market, may very well experience a bear market. What we're going to do is price that situation into the stock at this moment in time and assume that, maybe we do see a cryptocurrency bear market. Let's assume that happens. If it does, maybe we'll buy in then. I think that's what's happening right now, and that's why Voyager is trading at such a cheap valuation. And the thing is, if we do end up seeing that bear market, and if revenue does end up going here with this many users, once we're out of the bear market and we enter back potentially into that next bull cycle, revenue is set to explode, meaning that during this bear market, what if investors potentially say, you know what, we know that revenue will pick back up within the next couple of years. So why don't we value this company assuming that situation? So, when we look at the PE ratio, if I'm using 30 and you consider that maybe optimistic, I think that's low. Because given the fact that the company's core business is capable of producing so much more net income, investors may look forward and say, this business can generate this much revenue, over $1 billion in yearly revenue, not $360 million in revenue. All that needs to happen is wait a couple years for cryptocurrencies to get back on their feet. In that situation, we could potentially have them trading on a 40 or a 50, which obviously increases the long-term upside. Don't get me wrong, the stock will most likely decline. I'm not saying it's going to go to $30 per share during a bear market. I'm just saying this is fair value. And all I'm saying is that even if we do end up seeing a bear market in cryptocurrencies, there's an opportunity for Voyager to maintain a stock price in the $20 range. If you think monthly revenue per account might decline even further, that's fine, right? What if it declines to $10 per account? That's bad. But then you have a situation of investors saying, you know what? What if we know $10 per account, that's bad right now. But we're going to look forwards because we know that revenue is going to rebound and profits are going to rebound by 2024 to 2025 to a much higher place. And we're going to price in a scenario, something like that, causing the share price to increase, which is kind of what we're doing right now. Investors are pricing in a bear market in 2022, 2023. What if they price in a potential bear or bull market in 2024 to 2025? So next thing I want to touch on is the VGX token. What will happen if we end up entering into a bear market in the case of the VGX token? Let's be very clear. The VGX token is a cryptocurrency. It isn't a stock. It isn't dictated by revenues and profits. It's dictated by a few main things, and I want to go through this. VGX isn't a normal cryptocurrency as it is backed by an actual business, Voyager Digital. As Voyager continues to grow, the VGX token's utility will grow alongside that. The VGX token really does have something special in the sense that, once the loyalty program does get launched, we should see a bit of a kind of relationship between total funded accounts and the price of VGX. So if we do end up getting a situation where crypto goes into a bear market, let me make this very clear. VGX will most likely fall alongside the rest of the cryptocurrency market. It isn't, immune to a drop like Bitcoin, Ethereum, Cardano may experience. And when you invest in cryptocurrencies, these bear markets that you experience should really be considered a buying opportunity. The times to make the most amount of money is when things are boring. That was 2018 and 2019. That was after the 2013 bull market. everything's fun and games when everything's going up. When everything's going down, it really takes a lot of courage and a lot of conviction to go out and buy things that seem to be going down almost on a regular basis. And with the VGX token, if we have a situation like we're having right now, where, fundamentals aren't reflected with the VGX token price, it may just be an opportunity to buy in. And although I can't tell you this is the price that VGX is going to be trading at, we do know that total funded accounts, like we saw with Coinbase, are more likely than not going to continue increasing throughout the remainder of the next couple of years and over the next decades as Voyager continues to grow, prosper, and become one of the biggest companies in the cryptocurrency space. It's such an exciting company to be a part of, whether you own the stock or the token. And, I just want to make this very clear. If we do end up going into a bear market, it isn't a reason to panic. We've been experiencing these in the past, and, it's just the cryptocurrency cycles that just continue to happen and honestly are just phenomenal buying opportunities, as they mainly happen for no real fundamental reason. Anyways, guys, if you found any value in this video whatsoever, please consider subscribing. Keep in mind, I'm not paid by Voyager whatsoever. I make these videos because I'm invested in their stock, and it really is phenomenal to see that even if monthly revenue per account decreases by 90%, we still may get a situation where Voyager isn't trading at that low of a valuation because of how undervalued their stock is right now. So when we talk about what I'm doing, I'm not selling any shares. If cryptocurrencies do go parabolic and we do get a situation where Voyager and Bitcoin go, potentially Bitcoin goes $150,000, $250,000 per Bitcoin, it may be an opportunity to trim a little, to take a little bit of risk off of the table. But I think this model really does show the potential for Voyager to continue growing their user base and for investors to price in the potential that user base has for the next 4-5 years. Anyways, guys, thank you so much for watching this video. Again, if you found any value in it, please consider subscribing. Thank you all so much for watching, and have a great day.